What's going on, everybody? It's Stas here. So the stock market had a red day today. S&P 500 down about 15 points, down 0.4%. The Dow Jones down 85 points, down about 0.3%. And the NASDAQ went down as well, 80 points in the red, down 0.7%. And somehow the Russell 2000 guys ended up squeezing a green day up 2 points, up 0.15%. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over the top stocks that I'm looking to buy as we're getting deeper into August here of 2020. And I also want to go over some earnings reports from Nvidia, from Lowe's, and from Target, as well as what I've been doing in the markets as of late. What stocks am I buying? What stocks am I selling? We're going to go over all of that in today's video. So if you guys find value, hit that like button for me. Consider subscribing to the channel. Check out all the free links down below in the description box if you want to join the Strive Smart Discord chat, the Facebook group, and if you want 2 free stocks from Webull valued up to $1,400. Those are also linked down below in the description box. All you have to do is deposit $100 into the account and you get those 2 free stocks, and I also get 2 free stocks since it is on affiliate links. So let's get into it today, guys. And again, the markets were red. S&P was down, Dow was down, NASDAQ was down, and the Russell somehow again squeezed a green day, which I'll make another video on this, but that is why it's important to have some small caps in your portfolio to kind of balance that out. As the large caps are down, a lot of the time small caps do well, but again, we'll focus on that in another video on why it's important to have diversification amongst small caps and large caps, right? But for the S&P 500, we actually hit an all-time high. We hit an all-time high today, despite us going down about 0.4%, and that all-time high was almost at 3,400. It was at 3399.54 to be exact. And once we did hit that all-time high, if we take a look here on the intraday chart, we saw a double top about an hour later. I mean, we hit the all-time high, started selling off a bit, rallied off of that little sell-off at about 12:45 p.m. here on the East Coast. We rallied off of that and hit 33.99 again on the dot, and we double-topped and saw a massive sell-off from there. So we saw a drop of about 30 points here on the S&P in about, less than 2 hours. So that's nothing to sneeze at. I mean, it's nothing crazy, but it was roughly a 0.8% drop from that all-time high to about that low at 33.70. So we saw the all-time high, saw the double top on the intraday chart, followed by the sell-off, right? And if we go to this 10-day, 30-minute chart, you guys can see the uptrend is pretty much still intact, right? We're still holding this 10-day chart uptrend here at a higher low, and quite frankly, we're holding yesterday's support at the close, right around 33.70. We're holding, 33.60 as well, which were the lows from back on the 14th and the 13th of August. So overall, to me, guys, this is looking like a healthy pull down, right? This is simply looking like S&P hitting an all-time high and some profit taking across the board here in the market. That is kind of what it's looking like to me at this point. Let me know down below, what do you guys think? And for me moving forward tomorrow and Friday, I'm looking to see, most importantly here, is the S&P going to hold 33.70, right? Are we going to hold where we closed today and where we held yesterday on the 18th? If we do, we start to curl back up, and especially if we break out of 33.80, that is where we could see a move higher here on the S&P to the point where, and especially if we break 33.90, to the point where we could be going back to those all-time highs, right? So watch 33.70 here on the downside and 33.80. These are both very critical levels when it comes to determining direction, right? Because We already talked about 3380 breaking. That's bullish on the upside, but let's say 3370 breaks on the downside, right? That is where we might be selling off even further. We could go down, let's say 3360, maybe this 180 SMA here on the 10-day, 30-minute chart. If we pull up this 4-hour chart, maybe if we break 3370, I've been calling this out quite honestly as well. We've talked about this scenario. We could be going down to 3330, right, which could put us here on this 50 SMA on the 4-hour chart. And 3330, guys, is actually an old all-time high from back in January of 2020. So I'm not surprised that we are seeing a bit of resistance here. Then again, the S&P, and I've been saying this as well, S&P really hasn't seen a major pull down since the beginning of August. So, I mean, if we do pull down to 3330, that is not too surprising to me. So that's kind of what I'm watching here on the downside for the S&P 500. For the Dow Jones, guys, on the downside, which we've also been calling this as well, is 27,500, right around this old high from back in the beginning of June. That would put us right around 27.5, as well as right around the 50 SMA here on the 4-hour chart. I think that is where the Dow will ultimately find support, and from there, we'll see. What is it going to do? Is it going to hold 27.5, rally from there, maybe try to go back to 28.2, which is the big resistance coming up here on the upside? Or if we break 27.5, we break that 50 SMA on this 4-hour chart, we could be going down to, let's say, 27,000 flat, maybe even lower to, let's say, 26,500. And let's not get carried away. Let's not say the Dow's going to drop 1,000 points from here, because nobody knows. All I'm saying is it's a scenario, right? It's a possibility, and it's something to definitely keep an eye out for when it comes down to the performance on the Dow in the next couple of days. So watch out for 27.5, big technical spot here. It's going to determine direction on the Dow, whether it's higher or lower. And the NASDAQ today down 0.7%. Like I said, tech was not doing too great. Amazon down 50 points. Google down about 11 points, Microsoft down almost $2, Netflix down about $7 today, and Apple and Facebook are the only ones that pulled a green day, but both of those were up literally cents. Facebook up 25 cents on the day, and Apple up 58 cents on the day. So nothing crazy here on the NASDAQ. But like the S&P, guys, crazy. I know it's crazy, but the NASDAQ hit an all-time high as well, $11,440. We hit that, double topped, and tanked from there, closing on a downswing of around 140 points from the peak, which from top to bottom, guys, that's a drop from of about 1.1% in the span of 2 hours, the last 2 hours of the market. So the NASDAQ tanked, S&P tanked, Dow tanked. Obviously, all the big indexes ended up tanking at the same time. And for me, guys, I'm looking at 11,300 as a support level here on the NASDAQ. And let me explain why. You can see here on the hourly chart, it is very clear why. The 50 SMA on the hourly chart is coming up. And the 50 SMA here has been a support. And it's actually placing the price here of the NASDAQ, if it hits this 50 SMA, it's placing us right on top of that double top resistance from the beginning of August, right? That is where we struggled on the NASDAQ. So if we're able to hold this old resistance, the old double top resistance here as a support, that is going to be a very good sign, for the NASDAQ and for tech in general, because from there, if we find a higher low, the uptrend continues, we start to bounce back up towards 11,400. I mean, that's going to be the continuation of the uptrend here on the NASDAQ, and we could be seeing more all-time highs from there. I know it's crazy, guys. I know it's crazy, but for now, it seems like that is a possibility. And with the election coming up, so many moving parts at this point, stimulus, Congress, election, a lot can change. And I think there's going to be a lot of volatility heading into the United States election here. And quite honestly, to prevent you going crazy, because there is going to be volatility, guys. What you can do, and of course, this is not financial advice. It's for entertainment purposes only. Let's put it that way. Always do your own due diligence. But what you can do to kind of shelter yourself from this volatility and kind of remain prepared. Let's say if the market crashes, not saying it's going to crash, but let's say we do see a big dump. What you can do is hoard cash, right? You can have a nice cash pile, whether it's in a money market fund, a high yield savings account, right? Whatever, even though those aren't paying much these days, 1% if you're lucky. You can hold cash there waiting for opportunities, or you can also hold some inflation hedge assets, some assets such as gold, silver. You can store your money there for safety. And if you're a bit more speculative, you have a bigger risk tolerance, you can maybe put your money into Bitcoin. I know it's crazy. Bitcoin it's a bit volatile, but it is an inflation hedge asset as well. That's kind of what it's classified now as, and people view it as, I don't want to say it's a safe hedge against the market and a safe place to put money, but it's kind of viewed as that, right? It's kind of viewed as a bet against the traditional monetary system. So, you could put money in Bitcoin, cash, of course, gold, silver. Me personally, guys, I have a lot of cash. I have a good amount of gold. And for Bitcoin, I don't have much Bitcoin, I'll be honest, but I do own a little bit. I own a decent, not even a decent amount. Honestly, guys, a very small amount of Bitcoin, but I still own it, right? That's the point. And for me, yeah, that's what I'm doing. And that's kind of what you can do if you are a bit shooken up here about what's coming up in the next couple of months, and it's going to be rocky. That's just my foresight at this point. That's kind of what I see coming up. And let me know down below in the comments, what do you guys think about the markets? Where are we going? Is the election, is it going to move the markets higher, lower, depending on the winner? What do you guys think? I'd love to know your thoughts down below. So let's talk about now what I personally did in the markets today. And quite honestly, I didn't do much today, guys. I'm still holding on to my positions here, and to run through the positions that I'm in without boring you guys, because I know if you guys watch my videos every single day, this is kind of a repeat, but let's go through it for the new viewers. I'm in GDX and GLD. These are my gold swing trades at this point, GDX being a gold miners ETF, and I'm actually down on my position now. I was up a little bit, I think this was yesterday and the day before. I was up, but I'm in at 42.30, and we saw a pretty decent drop in gold and gold stocks today, so I took a hit. We're down 4% on GDX today, but me personally, I'm down more like, I'd say 3% from where it is right now. And honestly, this is more of a longer-term swing trade hold for me. And I'm looking to maybe add more to it on this weakness. I'm not really panic selling out of this, because overall we are still maintaining the uptrend here on the 4-hour chart. But one thing worth noting is we are seeing a bit of a head and shoulder here. So I'm not going to add more money to it unless we see, or let me put it this way, until we see, if we see a break out of this support, right? If we start to see a move into 42, 43, that is where I might add a little bit more. But until now, I'm still holding, or as of now, rather, I'm just holding on to GDX and GLD. GLD, I'm in at around 181, and I'm a little bit mad at myself, guys. I should have, I know, shoulda, coulda, woulda, whatever, but I should have locked in profits on GLD when I had it yesterday. I mean, I'm still up. I'm in at about 181.40, so I'm still up a decent amount on my position since the ETF is trading at 182. But yesterday, guys, it was trading close to 190. So I left money on the table like an idiot, but I'm still long on gold either way. And if my thesis plays out, which I'm pretty sure it's likely to do so, I'll make money on GLD in the next couple of weeks. So I'm not sweating it, but overall, I'm in GLD, GDX being a gold miners ETF, and GLD being an ETF that strictly tracks the price of gold. It's not It's not a gold miners ETF. GLD strictly tracks the price of gold. And since gold was down today, so was GLD, right? So I'm in those two. I'm also in Clorox, CLX, at about 226.80. This is one that I want to add more money to. I'm up on this position, and quite honestly, I'm waiting for it to break 230, this 50 SMA resistance here on the 4-hour chart. I think if we can take that out, I think CLX is going back up to mid 200 or 230s rather, to the 240 level. So it's to me a safe swing trade at this point. This is probably quote unquote one of the safer swing trades that I'm in, at least in my opinion. And of course, you guys always do your own research. Don't blindly trade something because I'm doing it. But CLX, I like it. I'm looking to add more into it, and I'm holding it at this point. Also, I'm holding Upwork and Netflix. Upwork did decent earlier in the day, but ultimately fell under $15 again, down about 1%. And I'm in at around 1440, and ultimately I want to add more into this out of the 1550 range, right around there. So I'm being patient. I'm just holding on to it, and I actually see targets on Upwork into the $16, $17 level. So until it gets up there, quite honestly, I am not looking to sell out of Upwork. And I also said Netflix, guys. Netflix took a poop today, down 1.5%, down $7, and I am down on my Netflix position still. I'm in at $4.96, down about $12 per share, but it's okay. I have cash on the sidelines, which allows me to ride out some of these swing positions as I please, right? Because let's say I was pinching for cash right now, I'd have to sell out of some of these positions for a loss, right? But the fact that I have cash allows me to hold these stocks, these swing trades, without rushing and trying to force out of a trade, right? And that's kind of why I try and tell you guys to not always force all your money into the markets. Have some cash. You never know what's going to happen. You never know when an opportunity is going to come up. So just have that cash ready to go. And I'm also in FSLY, getting crushed on this one still. And I am in Workhorse Group as well. And Workhorse, quite honestly, guys, is one of the ones that I'm most excited about. We talked about it yesterday as we saw a move of about, I think, 10% yesterday at the close. Maybe it was more like 7-8%, I forget. But we saw a nice move yesterday in Workhorse Group, and it's really because of the activity we're seeing in the options market, right? We have some strike prices, $40. I believe they expire in October. We have a lot of those call options, those contracts, right? They're showing a lot of implied volatility, meaning a lot of people are thinking there's going to be a big move in Workhorse stock in the next couple of months. So that excited people, because if the $40 strikes are seeing implied volatility crazy, that means people are expecting it to maybe go to $40 by October, and $16 obviously being a lot less than 40. So that could have spiked up the price yesterday. And overall, I mean, I'm waiting to see what happens with the USPS contract, right? I might make a video more deep into it just for Workhorse in particular as we get more news around it. But as of now, I'm strictly holding Workhorse, and I will probably add more money to it, quite honestly. So let me know down below in the comments, guys, what are your thoughts when it comes down to the markets, what you guys have been doing, what I'm doing. Do you agree with my trades? Do you not? Let me know down below in the comments. Now, let's get into some earnings. We had Target today and Lowe's, and both of these companies, guys, holy crap, they destroyed earnings. I mean, wow. Target ended up shooting up over 10% on the day, up about actually 13% on the day. Unbelievable. Adjusted EPS came in at $3.38 versus $1.62 estimated. So they crushed EPS there, almost doubled it. Wait a second. They Wait, was that an over a double? That's over a double beat in EPS. That's incredible. Revenue came in at $23 billion versus $20.09 billion. So a double beat there in EPS and revenue. And same-store sales growth was pretty incredible as well. Same-store sales growth came in at 24.3% versus the 7.6% expected. Unbelievable beat. And e-commerce services saw dramatic growth with Target's curbside pickup service jumping. This is just ridiculous. More than 700%, guys. I mean, come on, 700%. I mean, geez. Sales online and at stores open for at least a year. So, okay, sales, let me reread this so it makes sense. Sales online and at stores open for at least a year climbed by 24.3%. I already said that earlier, I just realized. And that is actually an all-time high by the retailer. So incredible there from Target, guys. Absolutely incredible. And for me, did I get any of this game? No, I didn't. I'm not in Target. TGT, I'm not. But, if you guys have been watching the channel, I mean, we've been calling Target out ever since the 128 break, 130 break. And the crappy thing is, guys, about having a YouTube channel is you talk about a lot of stocks. I mean, I talk about a lot of stocks. And you can't always grab every single move that you talk about, right? It's just reality. And this is one that I've been calling out, I've been talking about, but I just didn't catch. And let me know if you guys caught it. I mean, let me know down below in the Target shareholders today. I mean, the last couple of weeks have been insane. The stock, literally since the beginning of August, is up almost 20%. So that's incredible for Target. TGT, another one that did very well, kind of piggybacking off of Home Depot's earnings, is Lowe's, ticker symbol LOW. Lowe's came in adjusted EPS of $3.75 versus $2.95 estimated. Revenue came in at $27.3 billion versus $24.27 billion. So double beat there on Lowe's. And the same-store sales growth was 35% versus the 16% expected. Unbelievable. The growth here in these stores, these retail, these massive stores, guys, is just incredible. And the Lowe's website sales also soared 135% as the pandemic pushed more customers to shop online. And Lowe's profits soared 68.7% to $2.83 billion, up from $1.68 billion a year earlier, even as it spent more money to keep employees at work and safe during the pandemic. Let me say that again, guys. They did profits of $2.83 billion this year, and that is up, or this quarter, and that is up from $1.68 billion from last year's quarter. I mean, what? That is incredible. And that is kind of why I like Lowe's. I like Lowe's and Home Depot. I think they're very good businesses. And quite honestly, I don't know which one I'd pick. I mean, I don't know which one I would pick at this point because both of them do well. They're crushing earnings. They treat their employees very well from the top to the bottom. I love that, right? We just talked about Home Depot yesterday, how they spent, I think $400 million extra, giving employees bonuses, weekly bonuses, wage increases, whatever. Lowe's did the same thing. So I love companies that treat their employees right because that is the foundation at the end of the day, right? If you treat your employees right and they feel, well, they're treated well, they're going to perform better. They're going to drive better results. So I'm loving that from Lowe's and Home Depot. That is very good stuff there. And NVIDIA ended up reporting NVDA adjusted EPS of $2.18 versus $1.97. So a beat on EPS for NVIDIA, and revenue came in at $3.87 billion versus $3.65 billion. And the company's gaming business produced $1.65 billion in revenue, up 26% year over year, and above the $1.41 billion consensus estimate amongst analysts. So very solid there for NVIDIA. The stock's actually down about $20 off the highs here. We're down at 480 after hours here. The high was 2 days ago, or actually no, yesterday, we hit about $500. So watch for this dip. I mean, it's not too crazy of a dip. It's around a 4 or 5% window, but on the solid earnings report, hey, NVIDIA could end up being one that I might scoop up and maybe pick up maybe a move back up to the 490s, 500s from 480. We'll see what ends up happening. And L Brands, LB, also reported earnings today. The parent company of Victoria's Secrets and many other companies. I believe Bed Bath and it's not Bed Bath & Beyond. It's Bath & Body Works. I believe they own Bath & Body Works as well, which, quite honestly, guys, I'm a candle guy. I go there sometimes. You might be laughing at me. I actually have one right behind me. I don't know if you guys can see that, but I have a candle right behind me from Bath & Body Works. I just love candles, and when they have that deal, it's like, what is it, like $11 for the 3-wick candle? I pick up a candle or two. I'll be honest with you guys. I'll be honest. So LB is one worth watching. I mean, they did decent. The stock's up to about $31 per share here after hours. They generated $2.32 billion in revenue, down from $2.9 billion during the same time last year. So they're not making more money this year. But then again, it's not too big of a drop. I mean, $0.6 billion from last year to this year of a drop in revenue, considering many other companies have lost even more than that. Hey, L Brands is holding up pretty decently, and their adjusted EPS came in at 25 cents, so not bad there either. And again, the stock is up from $28.50 to about $30 here. So watch out for L Brands moving forward. I think this one is worth watching. And another one here reporting, I believe tomorrow, is Foot Locker that I'm watching very, very closely. Actually, no, this one's on Friday. So watch Foot Locker for Friday, and Alibaba is reporting tomorrow. And if it follows in JD.com's footsteps, guys, JD did very well after earnings. I mean, it's still doing very well. The stock's gone from 62 to 74 in a couple of days. I mean, if Alibaba follows suit from what JD did, Alibaba could be shooting up higher too. So we'll watch that one. Very worth watching in my opinion. And I've been getting a lot of questions about the bank stocks. Is it finally time to buy the bank stocks? And quite honestly, guys, I don't know if there's a group of stocks here that I'm more worried about than the bank stocks. And you may be asking yourself, why, Stas? Why? That's kind of crazy. And the truth is, they are beaten down. Yes, they are beaten down. JP Morgan down about $50 from its highs. BAC, which Buffett's been buying, it's down about $10 from its highs here on the 4-hour chart. Wells Fargo, don't even get me started on Wells Fargo. This one's down over $30 from its highs. And the question here is, shouldn't you be buying? The bank stocks are down, guys. Shouldn't you be buying? Well, the truth is there's a lot going on right now. The Fed obviously has 0% interest rates. That is holding the banks back. They're not making a lot of money, right? Higher interest rates is better for the traditional banks. Sure, maybe banks like Goldman Sachs, which they make a lot more money when it comes to investment service, trading and so forth. Goldman Sachs maybe hasn't been as affected as some of these other banks. But when it comes to, BAC, JP Morgan, I just think, guys, there's a lot of risk when it comes down to these. And sure, if you're looking out 5 to 10 years, maybe ignore this. They could be good buys if we're looking 10 years out. But if we're looking at, the next 1 or 2 years, 3 years with 0% interest rate environment, with where we're potentially going here with the economy, how much, the stress test didn't go so well a couple weeks ago, if you guys remember that. There's just a lot of problems here. And on top of that, guys, I mean, the Oracle of Omaha, Warren Buffett, this guy has been selling out of the bank stocks. I mean, that's an indicator. He's selling out of bank stocks. I mean, he did buy a bit more of Bank of America. This last 13F showed he bought more Bank of America, but he did get out of Wells Fargo. Not out completely, but he cut out a lot of shares of Wells Fargo. He cut out a lot of shares of JP Morgan, and he cut out a lot of shares of Goldman Sachs, I believe, or he maybe wiped out his entire stake in Goldman Sachs. I'm not too sure about that. Let me know if I'm wrong down below in the comments, but he definitely cut out of Wells Fargo, JP Morgan, but he did add more of Bank of America. So out of the stocks here, out of the bank stocks, if we're piggybacking on Warren Buffett, which I personally don't do, but if Buffett is buying a stock, you should always kind of look at what he's doing. Bank of America should be the one to look more deep into because Warren Buffett sees something there. He's very good at analyzing bank stocks. So this one could be the one to take a look at. But quite honestly, I'm just being very, very careful with these. And if Bank of America holds $25, hey, if it holds this old resistance as a new support at a higher low, I'm not against trading it. I think we could see a move maybe back up to 26, 27. Hey, maybe back up close to $30, which is where we were back in June. But to buy it long term at this point, I'm a bit skeptical. And with JP Morgan, JP Morgan, if we hold, let's say $99, 100, this could end up being a potential trade. But buying it long term here, I'm being a bit skeptical. And with Wells Fargo, I don't even want to trade it. I don't even want to touch this one whatsoever. It's on a downtrend, not really showing much signs of a pop. So I'm just throwing Wells Fargo, out of here. But let me know down below in the comments, guys, what are your thoughts when it comes down to banks? Are you interested in these, or do you agree with me that Buffett selling out, that's risky, 0% interest rates, that's risky. The banks are under pressure based on what we saw in the stress tests. Let me know down below. I'd love to know your thoughts. Now, when it comes down to some other stocks, Visa is finally making a move out of $200. This has been a stock that I love. I don't own it. I own MasterCard. I love Visa, though, just as much as MasterCard, but now I might actually consider a play in Visa as we're breaking out of this resistance that we've been struggling at ever since the middle of May. And you guys have to realize that's been 3 months. I know we've been in this crisis. It feels like a time warp to many people, me included, but May was like 3 months ago. It's crazy. This stuff started back in February. It feels like the past 5-6 months have just zapped by. But the past 3 months, Visa hasn't been doing much at all. And now we're finally getting the breakout of 200. We closed above 200, almost at 201. And this could be the first step to us getting back to those pre-crisis levels right around 210 to about 215. So I'm watching this momentum here on Visa for tomorrow. I didn't take a position quite yet, but this one's definitely on the top of my list for a stock that I'm probably going to buy, right? If there's one that I'm going to buy this week, Visa is for sure on the top of the list. Another one here, which I don't talk much about, but I do own it in some long-term accounts for the dividend mostly, is Altria. But now that we're seeing a breakout of $40, 42 actually to be exact, which has been at resistance ever since the middle of April, almost actually over 4 months ago. Now we're seeing finally some bullish momentum on Altria to the point where we might be going back up to $47. That's the next big resistance here that I'm seeing on Altria, right? And that is actually stemming back from, let's take a look here on the yearly chart. That was a resistance back on back in October of 2019. So Altria has been crushed, guys, recently, a lot due to Juul. Juul, that deal did not go well, but it seems like it's on the up and up now. We'll see what ends up happening. But overall, I'm watching for a move up to $47. And even if it doesn't make that move, guys, I'll enjoy the 8% dividend that it's paying here that I personally think is a safer dividend out there. And don't get it wrong, guys, Altria doesn't have much growth. It barely has any growth. If you take a look on their 10-year revenue, their revenue's gone from if I remember correctly, $15 billion from 2010 to about $20 billion per year now in 2020. So it's not too much growth when it comes to revenue. But what they do have is pricing power. They sell cigarettes, right? It is a sin stock, so if you guys are against that or for it, whatever, but they do sell cigarettes, and what they do have is pricing power. So maybe they're not selling as many units of cigarettes. Cigarette consumption is going down if you guys see the trends, but what they can do is raise the price. So that is why they're still making money, and the EPS has actually been going up over the past couple of years, and as EPS goes up, the dividend goes up, which again is why I like Altria. So that is Altria MO. SPCE is another one here that I'm watching, guys, on the weakness. We're down about $10 from the highs back towards the end of July. And one spot that I'm looking at here on Virgin Galactic is around 17 to 17.50, which just happens to be where we closed today. And this is a big level because if you guys take a look back in kind of in the April to May months, pretty much from March all the way up. Actually, no, false. From May up to about, July, 1750 was a resistance. And ever since we took it out, obviously it became a support. And that is exactly where we are now. So if we break 1750, there could be more blood in the streets when it comes to Virgin here. We could be going down to maybe $15, which would be bad. If you're swing trading it, but if you're a long-term investor, the lower the price, the better, right? So if we go down to 14, 15, I might pick up some more shares in my long-term account. But if 17 holds, and we break out, especially into 18, 19, that could be the breakout zone for this particular stock. And MELI, also known as Mercado Libre, Argentinian company here, very strong company, has been doing pretty well ever since the dip here after earnings. And for me, I'm looking at it here from 1,200 maybe up to 1,300. That is what I'm looking to maybe play on this upwards momentum back to the all-time high here. And mind you guys, this company, should I say, had a pretty solid earnings. They had a $1.11 EPS versus the 2 cents EPS. They beat on revenue as well. So watch out for Mercado here. Also, Activision Blizzard, it's off about $8 from the highs. This could be a nice play if you guys are long on video game stocks, which I personally am. So I'm looking to see if it can break 83 to 84. I think that could be the breakout spot on Activision. And two last ones, should I say. DKNG is selling off 2.5% today, but yesterday it was up about 10%. So, you make some and you lose some here, but overall, it's holding the uptrend over the past couple of days, and you guys can see it more here on the 5-day, 5-minute, and I'm looking to see if DKNG is able to hold 35. 35 was a resistance. We broke out of it. Now let's see if we can hold as a support, and from 35 up to 40, that is where I'm looking to see a move. That's the move I'm looking at here for DKNG. And the last one, which saw a pretty big surge earlier in the day, if you guys were watching, was Beyond Meat. BYND. We were down to 121. Seems like the Bears were in charge here. We broke 125, big level of support, but the Bulls came back and they said, no. We're going to take 125 back. So the Bulls got Beyond Meat from 121 back over 125, which goes to show how strong 125 is and how strong the Bulls, or how much the Bulls want Beyond Meat to hold 125. So as long as Beyond's holding 125, running up maybe to the 130s, I think it's worth watching. If it breaks 121 tomorrow into the 1-teens, that could be a signal of a further sell-off for Beyond Meat, so I'd be careful there. But as long as we're able to break out of this downtrend, 130s, 140s, I think, Beyond Meat's heading much higher. So overall, guys, that is it for today's video. If you guys found value, as always, hit that like button for me. Consider subscribing to the channel, and don't forget to claim your 2 free stocks from Webull. Those are valued up to $1,400, linked right down below in the description box. All you have to do is deposit $100 into the account, and you get your 2 free stocks valued up to $1,400. So I'll catch you all in the next video. Thanks for watching. And oh my God, I almost forgot. Don't forget to follow me on Instagram as well, at StockSurfS, if you want to see daily updates when it comes down to stocks during the day, what I'm doing during the day and so forth. Follow me on Instagram, at StockSurfS, and the 2 free stocks. Don't forget about that. I'll catch you all in the next video. Thanks for watching. As always, be safe out there, guys. Peace out. What's going on, everybody? It's